Hi guys, good morning. Thursday 17th of January. Just gone 8:30 here in London, and as you can see from the main headline on my screen there to the left, Theresa May survives Labour no confidence vote. We'll come on to that in a bit. Market reaction actually quite limited, so we'll look elsewhere. We'll have a run through of what happened overnight yesterday during the market hours as well, and we'll have a look forward to what could drive price going forward for the remainder of the session. So just switching back to the charts from yesterday, data-wise, or actually I'm bringing the calendar from yesterday. We had some inflationary numbers out of the UK at 9:30, which, as you can see, some were in line, some slightly better, some slightly worse for the UK. Obviously, the main focus was always going to be on Brexit, the no confidence vote, which was scheduled in for yesterday evening. And you can see, just if I highlight the area here of that data release and the sort of the hours before and after, you can see nothing really happened. And actually how it remained for the rest of that day, price was contained within the range for sort of, if we're looking here on the futures, between 129.38 and below that 81, so sort of a 50 tick range, which if we look at the previous day, you can see just how much more contained it was. Quite a key resistance level to keep an eye on, which we just couldn't break above, and the same was for all the other UK pound related pairs. I know personally on my Twitter I was looking at pound against the Aussie and yen, both to a broken higher, and look to test those previous highs of the week, much like cable here, but we never really got the opportunity to sort of extend a push higher. So for now, worth keeping an eye on those levels should we push on. We'll come on to sort of what could happen next in Brexit, but for first briefing in a while, just going to push that to a side, as there is some other interesting points in the market which could dictate other assets, especially if we come on to the S&P in a moment, and that key resistance level which we were sort of flagging all week, and Twitter had also been talking about it a lot. We touched that resistance point yesterday, so where we go from there may also dictate price quite significantly. Other data points to be aware of yesterday coming into today's session, if I just lower oil down, we had the usual DOE numbers at 3:30, and the red candle that you see here is that initial reaction. Yes, we had paired the loss since then, only to come back and sort of gradually grind below $52 again. The reason being the distillates and gasoline had a rather big build, or more than expected, and since then you can see we are just sort of drifting to that lower point of the day. Again, another market just to keep an eye on in the morning about where we go. More importantly, if I just switch over to the S&P on that daily chart, you can see here, if I just move the chart to make it smaller, just so you can get everything in, we had that trend channel which worked fantastically well on the break and retest on the 17th of December. That sell-off continued all the way down to Boxing Day, and just like the previous chart we looked at, recovered there with oil, and yesterday touching the retest of the trend line pretty much perfectly. We had a couple of tests post cash open, it just couldn't get through. They also had the 50 DMA, and of course, you know, some previous support turn resistance levels before that breakdown early December as well. So massively important, and why I've decided to sort of stop talk with this rather than Brexit is just the implications this level could have going forward for other markets. We've seen that recovery in oil as well. I think a lot of this S&P recovery was due to oil recovery. So $50 to $55 in oil is quite key. I think if we get above 55, S&P does go higher. If the S&P goes higher, I think you could have a positive correlation that will come through to, say, the Aussie dollar. Most likely the reasons behind a push higher in S&P is going to be because of, well, oil recovery, so you've got that commodity correlation, and also because trade talks are now more positive than what they were, so therefore China's going to be pushing higher. China, Australia, good correlation there as well. If the reason perhaps is more down to the recovery of oil, maybe, you know, OPEC announcements or the DOE releases. So if oil was to push above 55 and S&P likewise was to follow, you might have a good opportunity whereby the CAD against certain currencies also recovers as well. Other correlations, obviously with the S&P, you're looking yesterday at the Dow Jones and the Nasdaq. The Nasdaq will go to first. You can see similar sort of time on that cash open, pushed higher to drift down, and we are now lower. Bit to do with the oil perhaps pushing lower for the S&P, but really it's just a case of that technical level just working really well. The outperformer in the US yesterday was the Dow Jones. So if we just switch back over to a couple of the headlines, yesterday you had Bank of America and Goldman Sachs produced really good earnings, and Goldman Sachs in particular had one of its best days in a long time, and that helped push the Dow Jones. Obviously the banks sector within the Dow, obviously quite a big component of that, and helped push us to the highest it's been for quite some time. And other reasons other than the sort of the technical resistance or a technical push that we could get higher, of course, is earnings, and we've still got a few interesting ones to come out today, notably Netflix, which sort of attributed to the push higher we had in markets on the Tuesday afternoon. Here you can see just where my mouse is. This was the raising of prices, pushing higher. The Nasdaq, obviously, you can see pushing the most due to the sort of tech sector. So those earnings out today, which will be quite interesting and could be a reason we do get a retest of that trend line. If you're on Twitter and certainly recently, even though we've had this recovery, which if we have a look at the percentage from that low to where we were, I mean that's a 13-14% recovery. Even every day, it's coming lower, it's coming lower. Well, this might be now the point where it does drift lower, but earnings could be a reason as well that we look to push higher. So earnings, trade and oil for me short term are going to be the sort of the catalyst whether this can continue to push higher or not. Dollar yesterday quite sideways. Few of the pairs, notably obviously the pound, as I mentioned, pretty sideways in price action, but the Euro USD the same, really nothing notable data wise to sort of focus on there. In New Zealand they had some weaker data, and actually of the markets in general currency wise was struggling quite a lot. The break of the S1 down to S2 happened very quickly in the morning, sort of 9 o'clock, 10 o'clock time, and that obviously weighed, of course, on the Aussie dollar into the sort of the late morning as well. So that correlation still one to keep an eye on. And with S&P finding a bit of a ceiling, and Asian stocks in general just struggling for momentum this morning, one to bear in mind going forward, that this actually might start to drift lower, and you can see looking like it's just starting to find a top. From a support point of view, if I just refresh this chart here, you've got those lows that we had back on the 9th of January were also the highest from the 7th and the 20th. Really key level for the Aussie. I'll be taking other markets for the sort of the lead of where this goes here. If S&P comes lower, if the sentiment worsens in equities, that correlation would be something I'd be looking for this to break lower. I mean, if you were to not have the numbers on the right hand side or the chart name at the top, you could argue that this was actually in fact oil or S&P chart itself. Speaking of sentiment this morning, a couple of sort of headlines that are coming through, whether you want to read too much into it for the reason equities are coming down or not. Federal prosecutors investigating Huawei for allegedly stealing trade secrets. So this is sort of weighing on sentiment a bit. I think this is more a case of just how important that S&P level was, bit of profit taking, people that also want to get short, getting involved again. But you are going to get obviously headlines that do come through. They're not just going to put down the reason equities are down is because of a technical level, if you like. But going back to sort of the moves that we've had at the beginning of the year, I do feel while they've been some significant ones, oil, S&P, Aussie dollar as well, just to name a few. It does, and gold, of course. It does just feel like we're just raising some of the losses that we had into the back part of the year. Pricing in of the recession has now been pushed back. If we look at the US 10-year futures market, you can see the recovery again that we've had in this has been pretty incredible. If we go back to pretty much, well, almost a year ago today, you can see that's when it really started to come back lower. And now, well, as of a few days ago, we just hit a massively important level, which was the low that we had back in December 2016, so something not seen for quite some time, and quite indicative that recessionary sort of timeline has been pushed back. And S&P, that recovery you're seeing in the same sort of vicinity there, as the market's expecting central banks to sort of loosen a bit more or be more accommodative for a longer period of time. The Fed in particular are still coming out with these dovish comments. Just looking at the calendar for today, it's actually relatively quiet in terms of market events that could drive price significantly. You've got a bit of data out of Europe at 10 o'clock, but nothing I would expect to really move things. Going into the afternoon, you've got your weekly initial jobless claims numbers, which are still quite strong, but again, it's going to take a lot for that to be the driver for the remainder of the day. Speaking of those sort of dovish Fed comments that have been coming out, you've got a couple of Fed speakers to be aware of, and you've also got Carney speaking at 3 p.m. UK time, something again to bear in mind. But ECB speakers, Fed speakers, Bank of England and Bank of Japan later today, all coming out. So opportunities off of those comments, something to bear in mind as well. Just going back to obviously the main, well, arguably the main headline from the night, even though the market reaction, we'll just have a quick look at that reaction, was very limited. So 8 p.m. was the no confidence vote. Let me just get the pivots on to make this a bit clearer. And so here, if I just rectangle that area, so this was yesterday's price action within the rectangle. You can see a slight spike into sort of the result as it came out, but very, very limited. Not much doing there. As expected, 95% was the sort of the rumours going into that Theresa May was going to be okay and survive the vote, and she absolutely did. Market sort of had priced that in really from the back end of Tuesday's session, following the meaningful vote, which of course recovered as we look down here near 127 all the way back up to 129 and beyond. So that range from a technical point of view still very, very relevant today, and I'd be sort of interlocking that with the low that we've just seen. If I just move this rectangle this morning, which is yesterday's low, if you want to be super safe, and it might be prudent to do that when trading the pound, just sort of extending that to the highs that we've had this week and waiting for a breakout of that as well. So yeah, just seen in the chat, just to confirm that Netflix are coming out today, but also you've got Morgan Stanley, so Dow Jones, one to keep an eye on, American Express and PPG Industries as well. How did the voting come out? Let's have a quick look. Obviously the main number she needed, she got 325 to 306. The vote had come in, and you can see obviously the historic defeat that we had on Tuesday evening used up another one of her lives, and yesterday another one as well. She cannot have too many left, but it seems like she's going nowhere, and I think if anything she deserves praise for that. The problem I think going forward, and people are obviously quite sick of Brexit, and I think that's really the main reason I decided to start the briefing elsewhere. You know, she can't even get her own party to agree and back her, so I don't really see how she's gonna now get the other parties to come together and put their individual differences aside, which was one of the headlines I saw. I think that's just wishful thinking. Quite a good piece on the BBC this morning on sort of what happens now. Let me just copy and paste that into the Trading Live chat for you guys to have a look over. obviously posted yesterday, but you've got the sort of options going forward, and I think these are the sort of scenarios I would be looking to plan from a trading point of view. No deal, how that could impact the pound and where we go from that. I know people on Twitter have done their own different scenarios, and I think it's a good sort of way to plan for anything, because obviously these comments that are coming out throughout the day, as we saw, if we just go back actually to the Monday here, where I'll circle the area, when you had the rumour that ERG are gonna back the sort of the meaningful vote, and that's when you got a significant reaction. So what's moving the pound, certainly against the dollar at the moment, other than maybe the dovish Fed speak, is these rumours that are coming out, comments from your sort of influential people on Twitter, like Laura Kuenssberg, or even Peston as well. As much as I have my different opinions to him, he moved the market there on the Monday from that tweet. And these scenarios that could develop are all ones to be aware of. So obviously no deal, second vote for MPs, they're obviously going to come together, or supposedly going to come together, albeit without Corbyn at the moment, to sort of wind their necks in and perhaps to sort of go down that route. You've also got a major renegotiation, which of course May again reiterated yesterday that the deal is going to be done by May the 29th, I think. Actually, I've still got a graphic up here. Does that come into picture? Yeah, it does. Where UK to leave the EU by the 29th. You can see, and this was yesterday afternoon, at 84%. Someone on the 7th of January, so 10 days ago, when it was in the 40s or 50s, I believe, % chance, tweeted it's only going to go one way. And of course, that person was our very own Anthony Chung, who I'm sure some of you are missing this morning on the briefing. Unfortunately, I had to substitute in for him today. He will be in later. But yeah, this has continued to go higher. So the options as we go down, I think, are only going to increase the time and that extension, as you see here. If they were to seek negotiation, it's going to be a longer process, and you're looking maybe more June, July, which as I checked the odds yesterday on odds checker of when we would leave, it is pushing more that way. And actually, not to leave in 2019 is not a bad bet to have at the moment. Another referendum, I can't see that happening from a personal sort of guess, if you like. I think everything at the moment has to be a guess with Brexit. I still, on important days like yesterday and the day before, my friends in my football team are messaging me like, what's going on, how she survived another no confidence vote. And the market didn't even really move yesterday, but for there to be another referendum, which a lot of people do actually believe will happen, I can't really see that being the case. I know Theresa May has gone back on her word multiple times, but for her to say that there will constantly not be another referendum, she would have literally no leg to stand on. There was a couple of rumours going around last night that Theresa May was going to plan to do another general election. I don't really see that being any benefit for her, and I think if that was to come out, the initial reaction for the pound would be weakness on just that more uncertainty. You saw some supportive tweets from Europe yesterday saying, fair play to May. Europe wants to see that consistency in the top, and I think with the recovery that you saw, just going back here to the chart now on the Tuesday evening, a lot of that is down to the fact that Theresa May is going to be sticking around. So a general election, I think, is just going to weigh on that uncertainty, and we do drift lower, and I think 127 below becomes an option pretty quickly. And just going back down to that general election is number 5 on that list. So please do, in your own time, have a look over the article. It is a pretty good one. Obviously, need 2/3 of MPs to approve to get that. Just on the no confidence vote, while the government one back in early December cannot be triggered for another year, Labour can do so again at any time. And of course, if we just go back, it's in here somewhere. I was reading it, and maybe it wasn't this article, but they would have 14 days to see if any other government, or if the government can win back the confidence. So it wouldn't be a straight thing of once that no confidence vote is triggered, say by Labour, that it's the end of the road for May. She would have 14 days to recover. But again, that could be something that happens again, although the reaction that we saw yesterday was very limited, and I think for now she would win another no confidence vote in the future. Number 6, here you go, yeah, another no confidence vote. So interestingly, the MPs vote for the motion, then it starts a 14-day countdown. If during that time the government cannot, or if the government or any other alternative government cannot win a vote of new confidence, then an early general election would be called. And for me, that's bad news if it was to get to that stage. While I'm from if we just put the pound on a daily chart here, and you can see some annotations that we've had on for a while that Anthony was sort of having a look at yesterday. I think if we were to go down those routes of sort of delaying the vote, but more so to do because of a reason of a general election or another referendum, I think the pound would weaken into that. But I only see this time next year the pound to be higher. Of course, there's multiple sort of swings and roundabouts before we get to that point. But it's nicely sort of positioned now, isn't it? You can see that trend line that comes down, the sort of low that we had back in July, also October, really key level, and the psychological handle of 130 as well. Just having a quick look over that calendar one more time, just to wrap things up, in terms of sort of points to make in on your notepads or whatever you guys do. 10 a.m, something just to have a little asterisk there for European assets, 1:30 for US, and then really it's sort of quiet from a data point of view until this evening, and then obviously you've got some speakers out as well. Dollar index at the moment still above 95, relatively unchanged so far. For me, the key market I'm keeping an eye on is the S&P and that level around 26.25, and that trend line. Of course, obviously, the longer we go, the higher that trend line will get from that trend channel. But just the implications it's going to have on oil, on the Aussie dollar, on the Canadian dollar, on China, on other US equities, for me, really, really key level going forward. Gold is an interesting one for me, just to, on that final point, the gold has recovered quite nicely, more in my view to do with the dollar weakening. But if we have a quick look at gold's journey over the last sort of few weeks, let me clear that up. Obviously this was the key resistance and support level we had talked about for multiple briefings. Now we're above that, and you've got 1300 as a bit of a resistance point, or a bit of a key resistance point. We are starting to get squeezed in there. If we were to see equities push above the said resistance line, what do I think gold will do? Well, obviously, being a sort of a safe asset, and risk assets, of course, would follow equities. I think gold is just something you just want to focus on here, purely to do with the US dollar. As was last year, a lot of the move lower in correlation at times when equities was coming down was due to the strength or weakness of the US dollar. In this case, the strength when it was coming down. So for me, rather than sort of traditional risk on, risk off theory, it's a case of, is the dollar going to weaken a bit more, or is it going to strengthen? Opportunity wise, above 1300 as a long, I like the look of it, or a break of that trend line that you can see drawn on there as well. Either way, it feels like perhaps there was a relatively slow start to the year for markets. It does feel we're technical breaks away from it getting quite interesting again. But I'll post this obviously on YouTube as usual straight away for anyone that has joined late. But Anthony will be in the office in a bit, and we'll be on the mic throughout the day. But if I don't speak to you, hope you all have a great trading day.